Okay, peeps, welcome back. So today we're going to be talking about how this high yielding ETN pays up to 30%, and the ticker symbol is USOI. Let's get it. So as you guys can see on our portfolio here on M1 Finance, we do have USOI. You guys can see that we're actually in the money. We're up 15% on this position. Now, okay, granted, we don't have a lot. We have a relatively small position. You can see most of the returns is actually from dividends. We are still positive in the money on the market gains. Reason being is because we took some profit on this position as it was moving up. But we've already told you guys about our strategy. You can look it up on our YouTube channel, or basically our dividend investing strategy, where if it goes up, we take profit, move, I think it's like 5% of the position out of the dividend stock that we're in, and we'll put that money into something else that's undervalued and then reinvest the 95% back into that same position. So that's the reason why it shows that we're actually up 15%, because we did that combined with dividends. But you guys can see that we're down $10 a share on this particular ETF. We have actually thought about buying some more as of recently because, I mean, to be completely honest, the prices are starting to look more attractive. So before we get into what this actually is, let's take a look at the dividend history. So you guys can see that, excuse me. Sorry about that. So you guys can see the dividend history here over the course of 2023 has been pretty good. It basically is paying anywhere from the lowest being 60 cents to the highest being over $3 a share. That's pretty good if you ask me for, an ETN or a fund that's only $75 a share. I would say that's pretty good. That's basically the equivalent of what's actually more. It's I would say it's either equal to or more than the Coney ETF, because the Coney ETF pays about $1 a share, but it's at $25 a share. So it's pretty much about equal on that front. If you compare, the price versus the dividends. So you guys are getting pretty good payouts. As you can see, we're going to get $1.85 a share on the 27th, or in this case, the 28th, because we're not expecting same-day settlement on this particular ETN. So with that being said, let's take a quick look at the price. You can see we have oil on the left. This is the actual oil. This is the USOI crude Suisse X-Links crude oil ETN on the right. And you guys can see that the price action is very similar in how it moves. The price is not exactly the same, but the price action moves pretty much almost to a T, as you guys can see on the chart. At just kind of a quick glance of a bird's eye view. And as you guys can see on the right under the USOI ticker symbol, you guys can see the volume down here. This is another important point to make. As you guys can see, the volume is relatively low today on oil, but you still have 106,000 shares traded, and that's on a low day. Your higher days, you're going to be looking at, like, if you can see just below the ticker symbol at the top where you have the ask and the bid, it shows the volume. So you're getting roughly about 100 to 200,000 shares traded every single day, or every week, I should say, my bad. Every week. So if we go down to the daily here, you guys can see on the daily that it's still a lot of volume. So you get 26,000 on the day. You're ranging somewhere between like 50 to 100K, I would say, on the average daily volume. So that's pretty good. So let's get into what the fund actually is. So here's the Credit Suisse website. This is X-Link Exchange Traded Notes. And basically, I guess what it covers is commodities and multi-asset. I'm not really sure how that works. As far as I know, USOI only trades oil, but I could be wrong. So let's go ahead and take a look at the overview. It says Credit Suisse X-Link's crude oil shares, covered call ETNs, are senior unsecured debt securities issued by Credit Suisse, acting through its Nassau branch, that provide a return linked to the performance of the price return version of the Credit Suisse NASDAQ WTI crude oil flows 106 index. So yeah, it does actually. It looks like it tracks the crude oil prices, and as you guys can see on the chart, there is some pretty similar mirroring going on here in terms of price action. So it says that ETNs may pay a variable monthly coupon based on the notional option premiums So apparently it trades options. That's how we get paid from this. If any generated by the index's hypothetical monthly sale of call options on the shares of the United States Oil Fund LP, which I believe stands for Limited Partnership, such shares, the USO shares, the ETNs are listed on the NASDAQ stock market under the ticker symbol USOI. The ETNs should be purchased only by knowledgeable investors who understand the risks of investing in the ETNs. ETNs do not guarantee repayment of the investment amount, are not deposit liabilities, and are not insured or guaranteed by the Federal Deposit Insurance Corporation or any other governmental agency of the United States, Switzerland, or any other jurisdiction. So basically, pretty much what FDIC insurance is it doesn't really apply to stocks per se. That's more of your SIPC insurance is what applies to stocks. I believe up to $500,000 per account. But FDIC is more for like bank deposits. I believe the most current number is $250,000 per account. So it is kind of interesting that they put that in here. I just thought I should point that out. So it says index overview. Index seeks to implement a covered call investment strategy by maintaining a notional long position in shares in the USOI fund, while notionally selling call options on that position on a monthly basis that are approximately 6% out of the money. So it actually sounds kind of similar in nature to the yield max ETFs, although I'm sure they're not entirely the same. And obviously the product that's being traded here is different. Yield max is big tech, whereas this is basically, a commodity. It's oil is what it is. The notional net premiums received, if any, for selling the calls are paid out at the end of each monthly period as a distribution, which is true. As you guys can see here, they are paying roughly about the end of the month. The index's strategy is designed to generate monthly cash flow in exchange for giving up any gains above 106% strike price. So basically, it looks like they're capped at about 6% out of the money in either direction. The index's strategy provides no protection from losses resulting from a decline in the value of the USO shares beyond the notional call premium received, if any. The returns of the ETNs will be based on the performance of the price return version of the index, and therefore each monthly distribution will be subtracted from a notional portfolio of the index, and the level of the price return version of the index will decrease with each such distribution. So basically, it sounds like whatever the amount is that they make in premiums, pretty much deduct that off of whatever the share price is at the time of the payout. It sounds pretty similar to Yield Max and the Defiance ETFs. So that seems pretty standard. And this is a monthly pair, just so y'all know. So you guys can see that the payouts are pretty much every single month here. So it says the index is calculated by NASDAQ Inc., and the levels of the price return version are disseminated in real time under the Bloomberg ticker symbol QUSOI, but we're not looking at that. We're looking at USOI, as you guys can see. Fund was established in 2016, which is a good time frame, in my opinion, to be establishing a fund, because that was right in the middle of the bull market. And basically, they don't have any price history prior to that. So inception date 2017, maturity dates 2037. So yeah, that's a really long time from now. Here's your QSIP number. The annual investor fee is 0.85%, which is a lot. I mean, basically for every $1,000 you invest, you're going to pay $85. But if you have $1,000 invested, let's just do the math on this. So you have $1,000 invested as a dividend investor. Some people don't care about this. So we'll say you get this thing at $75 a share, which is pretty much where it's at right now. You get 13 shares. Let's say you get an average of, based on all these numbers here, you get an average of maybe, I don't know, we'll say $1.50 a month, because that seems probably like it might be about right. So you get $20 a month, and then you times that by 12, you're going to get $240 a year. And out of that $1,000 invested, assuming that's true, you're going to pay about $85 for the, wait a minute, let me think about this for a second. 0.85%. No, my bad. So yeah, $1,000 times 0.01, which I believe is 1%, so $10. So you'll end up paying, like, I think it's $8. So you're pretty much not really going to pay much of anything to hold this ETF. But again, if you want exposure to oil, You could do this. You could do what was the other one? XOMO by YieldMax. You could do ExxonMobil. You could do Chevron, BP, Shell. There's a whole number of them out there that you guys could take a look at investing into. One that we have is Enbridge, just so you all know. So we do have this position, and this pretty much covers what the fund is and what they do. You got some other information down here that you guys can look at, and I'll leave this in the description for you guys so you guys can see what you're looking at here. But as you guys can see, the payouts every year is pretty good. I'm assuming that this is based on every share that you own. So you guys can see in 2019, that was a great year. I think basically $73 a year. You can see these payouts are pretty crazy. I mean, look at this, $10 a share, $18 a share, $6 a share. I mean, that's that's pretty huge. So this pretty much covers what the ETN is. I'll leave this in the description for you guys below so you can look at it if you want to. Another thing that I wanted to pull up here is if you go to Yahoo Finance, you can take a look at the price history. It has kind of gotten smashed after 2018, but you can see that the price has kind of been fluctuating around. And again, part of the the sell-off here may be because, again, the distributions being paid out of the actual price every single month may have kind of had a slight downward effect on this thing. But what I actually want to point out here is the performance. So we're going to click on the performance tab. And the important thing I want to show you guys here is for those of you that are worried about price appreciation, you can see that some of these years were red. Okay, so you have minus 20% here, but then the next year you have a really great year. You have up 30%, minus 65%. We all know that's when the oil crash and the pandemic happened and oil prices went negative. For those of you that trade and do futures and options and stuff like that, you would know exactly what I'm talking about. It was, I believe, the only time in history that oil prices have ever gone negative. So yeah, that's a little scary, but then the following 2 years, we pretty much regained almost all of that. So over the course of 5 years, you're talking pretty much break even, and you still get paid a really juicy dividend on top of that. So you guys can see the performance overall here, year to date, 16%, 1 year, 14%, 3 years, almost 25%. So that's pretty good. Now, if we go over here to the charts, we're not actually going to take a look at USOI for this one. We're going to take a look at the actual oil itself, the crude oil futures chart or contracts, whatever you want to call them. So basically, pretty much the reason why we're considering buying this right now is because, as you guys can see, the price is basically sitting around this macro support zone that we have here. So this would be when the oil prices get into this support zone or even the one below it. That is the most optimal time to buy, in my opinion. As you guys can see, if we go back a little bit in history, it has actually kind of the lowest price that you can pretty much find is pretty much at these zones. So that would be one good reason to buy. Gives a lot of potential upside. As you guys can see from the bottom of the support zone all the way to the top here, it's a massive increase. You get about 30% to the upside. And again, buying the USOI, ETN, or other dividend-paying stocks based on this is, in my opinion, actually a good metric. So we'll take a look at Zomo. You guys can see that this has kind of been beat down with oil very similarly. And then we take a look at ExxonMobil, which is another big one that everybody loves. So you guys can see that it's pretty substantially down from the all-time highs. I think the last time we mentioned this, we said we weren't going to buy it because it was at highs here. Again, we had a triple top and we had a nice sell-off here, so it's a good time to pick up at a discount. And CVX is the last major one in the US as far as I know. So you guys can see this resistance zone up here did ring true from basically, we'll say $190 a share. We are now down almost $50 a share from those prices. And again, part of the reason being is because crude oil has just been taking a hit. I mean, if you guys take a look at the chart here, you can see that we got some pretty serious bearish divergence going on. So you got the MACD death cross, you got the RSI death cross, and you also have this triple EMA death cross here. And we pretty much just blasted straight through the floor of this support zone right here and just went straight down to this one. So, but we are below the EMAs. If it keeps going down, probably going to sit around this zone somewhere before maybe eventually cracking and going to the next level. So, anyways, this is our review on USOI, the high yielding ETN from Credit Suisse. If you guys want exposure to oil without actually owning any oil stocks, or I should say, like having actual oil exposure, like the crude oil itself, this is a potential option to go through. I could be mistaken, but I think this one does not have a K1 form. Don't quote me on that, but let's actually look that up real quick. So let's see, does USOI have a K1 form? The reason why a lot of investors don't like this is because it complicates taxes. So yeah, I mean, when you get a K1 form, you'll get it directly from the company. You're not going to get it from your brokers. So that's what complicates the process. We don't like to invest in things that have a K1 form, if I'm being completely honest. So I'm not seeing anything here on the K1 form, but yeah, I believe this does not issue a K1 form. I could be mistaken, but I don't think it does. Yeah, okay, I'm not seeing anything, but if y'all know the answer to this question, then leave it down below. I'm pretty sure I saw somewhere that this does not issue a K1 form. So, because I know a lot of master limited partnerships and even oil companies do actually ship out K1s to their investors. So, anyways, hope you all enjoyed the content. Please like, comment, and subscribe. Let us know if you plan on buying this fund or if you think it's a good idea or not. And we'll see y'all later. Peace.